morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 3rd, 2025. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame right now. Look at this narrow range here that has developed over the last 6 trading days. You have today here heading into the RTH Open is trading 43% of average range with a current range of 29.75 points of range. At the moment here, we're kind of inside day within a bullish trend here, but we're sitting kind of in this box just above the previous impulse move down. That range right here. That right there can get a little dicey here, because if you fail back through 6840, back through 6800, it really opens up the potential to drop back within the range below. So again, that's going to be a big time zone to watch here early this week. As of right now, range bound. Could see a little bit more back and forth price action here. Still an overall upward bias here, but there is definitely some pressure here, especially on the crypto side. We'll see if that persists here. So any pullback here into the previous week's low, ideally bulls defend that and push it back up. A failure at the previous week's low, and you start to open up some weakness down below. Currently, from the FOMC key levels that were developed last Wednesday, October 29th here, we have seen mostly sell side action below those levels. At times you can get a continuation down until you're ready to come back to it. So again, that's one way that these things can play out. We'll see how it develops here moving forward. Looking at the NQ, same thing here with a narrow range over the last 5 sessions here. Inside day today, 47% of ADR at the moment. This one also has kind of a box that is developed above the previous key range high right here. And again, if we are to fail at the previous week's low, it opens up a bit of a backfill into the range below. But we still have, again, kind of a longer term uptrend that has continued to develop. Even if we were to pull back a bit, it would be very similar to a lot of the movement we've seen before. You get up here, narrow range, pull back, then you drive. Narrow range, don't even pull back here. This is a narrow range pullback, go. So even if we pull back here, this thing has been within a very bullish trending structure until that fails. And at some point it may fail. They always do. But you got to kind of be in line with the flow of the trend right now, and it's still up until proven otherwise, even if we do get some short-term selling in the meantime. Now, one thing that is bullish for today's session here, at least near term, is the fact that we are through the previous session's midpoint for a shot perhaps at pushing into the previous high. For the ES and the NQ, that Thursday high and low set the range. We knew it could be an inside day the next day because of it. That's still the range. We can drop down here and rally. We can rally up here and drop. We're still inside that range until proven otherwise. All right, looking at crude oil here. Let's take a look at crude. This one right now flat on the day for the most part, but had a little bit of a back and forth action here overnight. You can see right now this one's been modestly up against the FOMC key level. First resistance, then pushed through. Today's low here so far has been defended. One of the things we've been watching is 60. How does price respond at 60? And we noted before that if price were to pull back towards 60, bulls want to defend for a shot at perhaps getting this thing as high as 66. But again, this overall trend has been down, which has been quite the opposite to the rest of the market. You know, and any pullback here is still an opportunity for bears to defend and push this thing down. We are still in a bearish seasonal cycle for at least the next 5 to 6 weeks. And that's just based on, again, the average seasonality over the last 5, 10, and 20-year splits. But again, seasonality isn't everything. This thing can easily drive higher on headline risk. That offsets that seasonality. But as of right now, if we fail back through 5950, 5900 evens here, that could open up another round of weakness into 54s, which is the next major market structure level below. All right, looking at gold. Gold right now up 0.8%, but still within range. This one has not truly found a strong low yet since it started to mark down. I noted before that on the way up we had these narrow ranges and pop, narrow range and pop, narrow range and pop. until things got very, very volatile and found the highs. Now we're seeing the same thing, but kind of to the downside. Is this narrow range going to breed another round of selling pressure up ahead? We will see how that plays out, because this compression right here can easily release in either direction now. Doesn't necessarily have to be up. Before, we weren't even thinking about the downside. Now this could easily go down as much as it could go up, and at the moment it's hard to really go up meaningfully if we haven't found a strong low. This hasn't been a strong low. This was a decent low that could have gotten the mid, and it didn't. This was not strong enough yet. We may see another round of weakness here still. So again, continue to watch this compression here. 5-day range. If we do push to the upside, we'll see how high it goes. But right now, 4,200, a big time change of bias at that level so far. So some important compression and resistance could come into play here out of this one soon. Looking at, let's take a look here at the YM. The YM right now, currently kind of break-even-ish on the day. You have a compression here over the last 6 days, and we haven't really quantified that compression. We can easily do so here by bringing up the indicator and making this thing 6, and then you can see right here, there's your compression, 45% against the average. It is a high range compression, but still, we are in a high range, high volatility market, or coming out of one. Especially, this could lead to the next round of volatility. It could be down and then right back up. That's been how it's been. So again, until we break that structure, we're still in that mode. So if we do get a 1 or 2 or 3 day pullback, or 5-day, it's a discount that offers the next buying opportunity until proven otherwise, and that could mean somewhere between 1,500 points and 2,000 points of range ahead. So that could be a big time move. If we get a drop downward, the resulting rally could be perhaps 2,000 points off the lows. Maybe it's down and back up. Maybe it's up and down. We'll see. But quite a bit of energy built up in these ranges right now. Looking at Bitcoin here, you'll see Bitcoin here down quite a bit here, 1.65% heading into the RTH Open. This thing has lagged the broader market rally here. We have seen a tremendous reaction and rejection here off the highs. We've seen a reaction off the lows, but we haven't really recovered in either direction yet. Decent low, decent enough for a good bounce back, and it got the mid. But man, it's hung out in the lower half of this key range for a while. Does it lead to some sort of fall off up ahead? How low do we go? But that key range is going to be important here, because 150 is the upside target and 80 is the downside target, and both of those very significant target extremes. That shows you how significant that move was here recently, because that's the 100% up and down. That's quite the spread, and we could go in both directions. We could hit the 80 on the downside and 150 to the upside down the road. It's happened before. So again, that's a big time key range to continue to watch as we head into the new week of trading. Likewise, ETH down 4+% here, heading into the RTH Open right now, down toward the bottom end of its range. A bit of selling pressure here over the last week of trading, but barely hanging on to support right now. This one did get a midpoint here on the key range. 2570 is the downside target. The 100% target here takes you at about 5,900 on the upside. So that's a big spread as well. And, you know, again, if we make it down into 2,500, it's a pretty good opportunity to attempt to double it back to 5,000. Don't even need to get it up to the 5,900 level. Remember, we couldn't even get to 4,900 when we were sniffing the door here at 4,880. So the lower it goes here, the better potential for that double. If it gets into 2,500, can we go get 5,000 at some point down the road? So again, letting it pull back until we get that strong low. All right, that is it for now. We'll see how this plays out here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.